Welcome and thank you for clicking on my video. Yeah, I'm about to go work out, so it's going to be a good time. I encourage you to do the same. Make sure the body's good so the mind can stay good, because tomorrow might be kind of a rip around kind of market. That's why we're going to be doing the all-day live stream over on Rumble after the morning stream on YouTube. But I'm very, very glad that we were aware and used our common sense and said it would be very fishy for this market to squeeze or see some kind of short squeeze right before a big event like FOMC. Most likely we're going to see some rip around behavior like that. We were aware of that 30-minute maybe going to retest the 5-day, and we're going to show that off in a little bit. But it's important we take into consideration the first move tomorrow could be the wrong move. FOMC is going to be a very big day. We're heading into options expiration. So let's see what's likely for tomorrow. Let's get into it. First thing to point out, the timing of that FOMC, right? The Fed interest rate decision and the FOMC will come out at 1 p.m. my time, so that would be Central Time, but it would be 2 hours before the close. We will get that information, and 30 minutes after that, we will see Jerome Powell, and we might be listening to that live when that does occur later on, and we will be on Rumble when that happens. The link's down in the description if you would like to join us for that. Once again, we are still streaming live in the morning on YouTube, just so you are aware. If we wanted to pay attention to some levels to keep track of, because they're very important, we noticed that those levels actually helped us out today as we were paying attention to that 570 up there, but mainly paying attention to 560. The first point to pay attention to, also notice 550 popped its head up, and that's going to be important. We kind of sat right on this 560 for most of the day, right on that 5-day moving average. So what are the levels for tomorrow that we can read into from this? We notice to the upside that 570 becoming important again, and then we look down the line just a little bit and we see, oh, 560 is important again. But if we lose 560, I'm still gravitating to the biggest level, which is that 550. So now we can keep in mind 550 and the point of 570 and see if our daily expected moves help out with this. Let's get into the charts. The first point I wanted to make is people still overall getting pretty bearish. A lot of people still calling for 510, 500, 520 and things like that, thinking that this market needs to crash down further, when that's just not what the probabilities are saying according to our expected moves, right? We do have monthly expected moves where we are making reversal signals beneath them, and we'll pay attention if those reversal signals get wiped out. If those reversal signals get wiped out, then it's a totally different story, and we will be aware of that because we trade like water on this channel. But this is a 68% zone calculated using the options data, right? This is hard data, how the market was expecting, how high or low that this market could go within the month of March. And by the end of the month, we could end up back closing into that area with a 68% confidence, 32% chance to see something crazy. But we notice that that weekly expected move is still within the monthly, which is very nice to see. But we might have some chop around kind of behavior tomorrow to pay attention to, or over the next couple of days with options expiration. So let's look at those charts real quick. The ultimate goal for this is the daily to curl up back into our yellow lines there. And if you want to get those on your charts right there, that would be very, very good. First of all, I wanted to talk about the 2-hour chart. Something we need to be very aware of are, I think, 3 scenarios going into tomorrow, which would be the 2-hour, starting off on the 2-hour chart, talking about the riskier setup, right? If you remember, we put out that video saying how this could end up making that 30-minute rejection and then end up trying to take back that 5-day moving average. But if you remember a little bit deeper into that video from last week, from last Wednesday, we also talked about even after that, you could see a 2-hour trap. And so we are going to talk about that right now. We're going to talk about the fact that that 2-hour trap could be taking place maybe even early on tomorrow before we actually go into FOMC. What that would look like to the bear side is if this 2 hour is able to cross down, we would look for some kind of divergence point, see if that is formed. If it's not there though, and it doesn't confirm, it's not there. But we can notice we always have been talking about that place we left behind, that gap we left behind, that unfinished business. And we know that that level of 550, according to the options that we were looking at, pretty important level. So if we head to the downside, we might see that move outside of the daily go down towards 550, maybe even tag that weekly since we gravitate to it, and then see that turn back up into positive territory, which would be fantastic because you would see a very significant divergence on the 2-hour MACD and RSI at the same time. We'll pay attention to it, and that would be what you see right there if we're going to be able to flip this back around. Important to make sure we are confirming. We still aren't leaning in any way really towards some kind of stock market crash right now, but we are aware that if this turned down and it never curled back up, well, then the divergence was never there. Okay, so we'll be paying attention to that with you guys live. But what happened today, right? Today we were talking about the 30-minute, right? Going into today, we had that video last night where we were just like, be very skeptical if we keep squeezing into FOMC. That's very, very strange to do, people making decisions before that. So the more likely thing would be we're going to use 570, the bottom side of the monthly expected move, as resistance, and we're going to see this thing try to go tag the 5-day moving average, which is something very good. If you're bullish, you like this. Like, this is a good thing to happen. You would even, if you want to get bullish, you would like that 2-hour to drop down because it would make people very bearish, and potentially calls could be very cheap. A lot of people most likely will be going to the put side trying to call some kind of stock market crash. And then after this, we'll talk about something more complex. But why is it so important now to retest the 5? Well, you notice throughout this downturn, we have not been above the 5 since February 19th. That's a long freaking time, right? We tried to get above the 5 here, immediate rejection. So now you're seeing something different, and that's when I want to pay attention. This is when the signs are starting to change a little bit. The weekly expected move, they have been for the last few weeks expanding, increasing implied volatility, increasing implied volatility. This is the first week where it has decreased. And if you need these on your chart, they are very helpful. They actually use real data from the option market to figure out how high or low these things could go based on what they're expecting. So they are expected moves. So what we want to pay attention to is the next part of this, right? The simplest way to do this is the 30-minute curls down. The 30-minute is able to curl up, and we're able to potentially even see something crazy, but we have a big amount of implied volatility, much larger than today. So most likely we're going to get some rip around kind of behavior, which kind of makes me want to lean to that 2-hour going to fill this gap as it is unfinished business, and then we can start to see that upside once everyone gets bearish for some kind of crash. If we do see the 30-minute curl up, though, something we would be looking for is that 569.18 and 570.08. Now remember that we just showed those those call levels. That call wall is at 570. So very, very important to see if that comes there. We can see some kind of resistance. If we break through that, that would be a good thing. The other thing was the downside, right? The downside level we were paying attention to was 550, right around that gap, right? Keep those things in mind. So are we going to see the 30-minute just be able to curl up and maybe we get through, see something crazy, and then keep getting good and good and good news, get up to these type of levels before we see the next form of consolidation using the monthly now as support? Or are we going to see the 2-hour collapse down? And this is where I wanted to talk about the potential rip around kind of behavior. The way that this could become more complex throughout the day tomorrow would be if the 30-minute is able to curl up to that daily expected move, maybe cross through it a little bit to get to 570, we actually create some kind of double top, some kind of divergence down here on the MACD and RSI at the same time as we were able to get overbought. It would be very nice for us to see this, and then we see actual divergence that's really close to the center line on both the MACD and RSI at the same time. This would tell us that that 2-hour is very likely to curl down, and that would give us a hint, and this is how it would be complex, because you would see an upward move that then gets totally ripped away with FOMC. Right? It could totally get ripped away from FOMC, a divergence could pop up, then you could see the 2-hour actually confirm down back into negative territory, right? Maybe we see some kind of gap up or something like that, and then it curls right back down, and we see this head to the downside, and maybe towards the end of the week, it would have to be pretty quick, so I'm not necessarily leaning towards this. I'm more so leaning towards, weirdly enough, I'm kind of leaning towards that 2-hour divergence just right away tomorrow to get people nice and bearish. But if this were to take place and be very rip around, I think that's something you would see, and then we'd pay attention to a divergence down here. Maybe that confirms late Friday, or maybe it doesn't confirm and it ends up confirming next Monday. So we're looking at how things could look before options expiration, and then we're looking for what is the actual trap that is potentially going to take place during FOMC. Looks like if the 30-minute curls up, we could see some bullishness come in, pay attention to 570. If the 2-hour curls down, we could see that bearishness continue with some kind of almost potential ABC move right here. And that would tell us, hey, be watching out for 550, aka my daily expected move or my lower weekly expected move. Now we could go through the cues and do all of that analysis again, or we could just pay attention to what we really want to happen for this week. We notice we are outside of the monthly expected move again with a 68% chance to close back in it by the end of the month. It's important to note that's at the end of the month. That's not saying Friday or something like that. You have a whole nother almost week's worth or 10 days worth of price action to get through. So we need to pay attention to if this is going to get bearish or bullish, and that's unfortunate, but you didn't get confirmations today that really help you out, and you really didn't hit levels and the fact that the Q's lost the 5 is kind of a problem. We're seeing those resistance levels come in at that 5-day moving average, not able to see that 30-minute curl up. So if the 2 hour is able to confirm down here, we could head down, fill a gap, completely stay within the daily expected moves, even fill that gap, tap, cut out the lows, take away people's stops, and then we could potentially see something that reverses us back around. So we will be paying attention to this with you. We will make sure to point out these things during the live show. But the other scenario we need to pay attention to is if the 30-minute curls up into positive territory. Daily expect to move upside 483.57 to the upside, 465.51 to the downside for that 2 hour move down. That kind of A, B, C type of move to head to the downside could be there. And I'm kind of leaning towards that one, weirdly enough, even though I'm going to go through volatility, and I don't necessarily think that's showing the most likelihood of that happening, but the 2 hour did confirm up today. So the 30-minute, if we're going to see this for some reason just move back up, right, curl back up, a buyer steps in, buyers step in and take control for a bit here, well, then we'd be looking for the MACD to confirm to the upside. So for the Qs tomorrow, it looks like what we're looking for is, does the 30-minute curl back above this 5-day moving average and head to that upside expected move to fill that gap? Maybe watching out for if it becomes more complex of a base at this point, or does the 2 hour head to the downside and we see a 2 hour divergence right before some big squeeze after options expiration? Let's pay attention, trade like water, and make sure we are always having a plan for if things go really right, needing to take profit or leave some runners or something like that, or if things go really wrong. Important to have a plan for both. I wanted to talk about TLT for a second because I'm not necessarily reading too much into the yields. It's kind of interesting there. We could make more of a right shoulder if you want to go check it out for yourself. But I just wanted to show you the 2 hour divergence that is on the RSI down here, because TLT is suggesting that it's about to make an upward move, which means what for yields? It means yields could drop down, and people might actually celebrate that, and that's kind of what we want. We want people to celebrate something where on the back end of it, we kind of all know when those yields start to drop, and maybe they start to drop even dramatically, that's usually a sign that, yeah, we're really pointing towards recession, and that's going to start to affect stocks greatly. But I think we need one more upward move to get the bulls nice and happy before that gets ripped away. Get people nice and greedy, and then rip it all away from them, give them that rug pull. Something very interesting here is that this is confirming. It still is by that center line, so if it curls down, hey, negative territory, right? We want to pay attention to if that's going to turn down into negative territory. That means this low can get taken out, and you can go make a new one. Maybe we set up another point of divergence, but I just wanted to point this out because you do have a 2 hour divergence kind of suggesting, hey, at least the money is positioning in a way where momentum to the downside is weak. Yeah, sure, this can cross back down, but right now that momentum is weakening. We're seeing that take back to 5 and see a bounce off of it. So we'll see if that's able to resolve itself in the upward direction, which would mean yields might be coming down soon. Obviously, if they aren't going to come down, then the 2 hour would curl down into negative territory for TLT. Apple is going to be still, I think, the most complex, but I think it is really helping us in not having the best structure, because Apple does like to make those divergences, right? We're in a high of volatility times. Apple still does like to make those divergences. So I think that's really, really interesting that it's finally getting, after this big drop, you notice how far away it was from the 5 this whole time. And then we start to just flag out kind of like this. Now, your weekly expected moves, if you are a part of Patreon, the Patreon link is down there. If you need weekly expected moves for Apple, it will give you a great level down here to pay attention to for if the 2 hour is going to maybe cross down. Maybe it even ends up in the upward direction first, right? But it could cross down into negative territory, and then we could see that divergence point set up, and that's where a weekly expected move can really help you out. So if you want to get those levels, just hop on over onto Patreon. The link is down there in the description. But Apple, this is going to be the difficult one to trade. So let's look at something that might not be as difficult, but has seen some dramatic downside for a long time. Now, if you're already a part of Patreon, you're pretty excited for Tesla making this kind of move, right? You're pretty excited to see something like this happen. This is something that we're aware the SPY could potentially do, making some kind of base down here, using the 2 hour, getting either a higher low or more likely to chop that low to take out the stops and create some kind of divergence. But you might want to pay attention right now because you have some serious support here. Join the Patreon and you'll see it on your chart. So there is a steep divergence here. If we head just a little bit lower, steep divergence, and you're actually holding triple divergence on your RSI at this moment. So everyone's saying, oh, Tesla's a piece of garbage. Tesla's the worst. Tesla's the worst. Well, yeah, that's very obvious if you want to say it that way. And that's probably what people who sell at lows say, because the whole point is to buy or sell high and buy low. And so, yeah, this is down, what, 55%, and everyone was saying buy Tesla up here, but now that it's down 55%, people are going, this is terrible. It's just the psychology, man. The psychology is so interesting to me. So could this see a snapback all the way to 357.78? Because I think that's where we're going to get. I think Tesla has the opportunity to squeeze by 30 to 60% over the next like 2 to maybe 3 months if we're able to be bullish for that long. But this is very interesting because we are making that basing out kind of structure. We're aware how it can break down further, right? But thank you so much for subscribing, April Kim. Sorry, guys, I forgot to turn that off. Here we go. If this is going to prove itself, aka curl back up into positive territory, take out this high, that might be what you need to get to a price point of about 305, get a massive move, get back into that trend, and then turn back up to the upside. This would be fantastic for Tesla. Obviously, at this moment, the 2-hour is crossed down, which invites more negativity. But as we're pretty much sitting on one of the best supports that we like to use, aka maybe a weekly expected move that you can get over on Patreon, we do see that how that could form a divergence and really get people trapped, because that's what divergence likes to do. It likes to show them the next move, chop that low, and then hold up a little bit better with some sort of tapering, and then we actually see this end up in the upward direction. A 2-hour divergence here for Tesla would be very likely to turn up a daily chart. Now, I wanted to quickly say that you're going to maybe see a theme with a lot of these stocks, and that's the fact that, hey, a lot of them, especially if you're on Patreon, you're pretty excited the levels that they're hitting to the downside because they're creating divergences with some key levels that we like to use. And you'll notice this from Amazon. Yes, it got rid of this little divergence point right here, but that was a rejection divergence. I don't even like that. So as long as it's holding this one, I'm pretty happy with it. As long as it's holding the divergence created at this low, pretty happy with it. So is it holding it at this moment? We obviously see it is on the MACD. We see that it is on the RSI, so that is fan-freaking-tastic. We love to see it, and if this is able to curl up on a 2-hour chart, that would overall tell us, hey, that could be the moment where we start to curl up daily charts, maybe even across the board, but in this case for Amazon, we want to watch out for that 213.52 if that happens, but we will talk about levels as we get updated weekly expected moves for the next week. So make sure you're subscribed so that you can get those updated moves for the SPY and the Qs on Sunday. But something here that we do notice if this is going to see a massive squeeze was we never made that right shoulder. And a lot of time we talk about on this channel that right shoulder that could have been. So if we're able to get to this area, maybe make a little handle, then head to the upside, this is where we want to watch out for lower highs in the market. And you notice it's kind of around earnings. So we will be paying attention to that. It might mean the risk around earnings might be high. Might mean, hey, I got to play the squeeze. I got to make money in the squeeze, but do I want to assume the risk that comes with earnings? And that will be a big deal. But first we have to see if this stuff is proven. First, we have to see if Amazon can curl up on this 2-hour as it has seen another gap down. But weirdly enough, during that gap down, it actually tapered off one more time, holding all of the divergence points on the RSI. NVIDIA, we do notice, did curl down on the 2-hour chart. Now, this does make sense. Another one of those maybe right shoulder that could have been, right? We might make an even right shoulder dipping down on this 2-hour to lower levels. Now, Amazon isn't suggesting it's highly probable to close below this gap fill right here. It's actually saying we might not even fill that gap this week. But if we're going to fake people out, it might be nice to go fill that gap, even curl down a little bit more for one more touch in this zone, not have to make a head and shoulders or something like that. But if this is going to curl down, I think the 2-hour, if that's able to go negative, we're very likely to go fill that gap tomorrow, and we'll see what happens if that thing's able to curl back up, because NVIDIA's actually seen some pretty good price action. Maybe it's because of that event that's going on and all that good stuff. We'll have to find out. Let's click into a 30-minute chart for just a moment here and show off. Yeah, the 30-minute, okay, it went down, it tested the 5-day moving average. But is that overall a failure? Well, your 30-minute at this point would be telling you, hey, the bars went from pink to red. So that's overall saying we potentially are rejecting at this exact moment, able to go negative. But we want to pay attention if there is some kind of 30-minute move up. We can pay attention to higher levels than even right here, right? We still aren't in the point of time where NVIDIA has like the worst expected moves. We're at a lower expected move. It's seen some positivity. So if this 30-minute can curl up and go positive, we might look for that lower high, right? We might look for some kind of lower high. This could be a cup and handle right now, actually. So what I'm really paying attention to when it comes to NVIDIA is overall this gap down here. Is it unfinished business? Are we going to curl down further? People are going to start to talk really negatively about stocks across the board and NVIDIA, and then we get outside of a 68% zone and we just curl back up into positive territory, seeing a nice higher low for NVIDIA. That seems to be something I am leaning towards right now, but maybe tomorrow's price action will help us out in dictating if that's actually going to happen. AMD is in a very similar boat, so I don't think we need to spend too much time on it, but you'll see that the 2-hour is pretty up there, is able to get an overbought reading, but we're reacting to a fantastic level right now to build back, right? To build back. Now, what do we need to see in this area? Well, actually, I'm not against us filling some of these gaps, going back into the liquidity and then turning back up into positive territory, right? Seeing that 2-hour steep move down, then maybe on Friday we start to see something interesting. But if this is going to be tighter, right, stocks might move pretty crazy. We might see this 30-minute divergence first, or see that 30-minute drop off a little more to fill a gap before it turns up. But mainly the 30-minute is in positive territory. If that curls up and crosses through the center line, even if it goes a little bit deeper, it would suggest that we can take out this high, go make a new one. And this is going to be a level that we really want to start to use as support if we do all of that. So just pay attention to it. AMD, just great reversal signals on this 2-hour. We pointed it out and said, man, I'm not a big fan of trading AMD all of 2024. It was very difficult, I would say, but this is a 2-hour divergence on your MACD, on your RSI, and it was the steepest one. So someone did come on the live show. They asked, hey, which one do you think has the most significant divergence? I actually think that that was AMD as far as this one goes here, even though we saw like quadruple divergences forming on a lot of stocks across the board. And we're going to get into Meta to show you one of those right now. Meta doing some crazy stuff because it is now outside of a monthly expected move going down to a weekly expected move. I'll just let you know because I'm trying to help people out and understanding that these are basing out signals. They can fail, so we have to have that plan for if they're going wrong. But you see these dailies that have just been going down and down and down forever. They look like they need some kind of relief, and that could end up being some kind of squeeze as people are getting very, very bearish. So we are seeing that, and you're seeing it directly go to that weekly expected move and start to get a bounce. So that's fantastic. Our levels are important. Did it form the divergence, and did we hold the levels on the MACD and the RSI? Well, we talked about this, how it wasn't on the MACD and RSI at the same time, right? So we wanted to make sure that that wasn't going to happen at the same time. We got the blip and we said, hey, this could be the moment. Watch out if we need to make it again. And we noticed that we actually were holding a lot of these divergence points, giving you overall holding a quadruple divergence just with one little blip, which more so would be leaning towards rejection. But this is happening at the weekly expected move outside of a monthly expected move. So this is when we need to pay attention, because this is where people can make very, very bearish bets and be completely wrong after options expiration. But as this is curled down, I'm not inclined to really make too many decisions early. I can take a risk to reward play, right? If we pay attention to this, it's like, well, if this has been going down and down and down forever and needs that snapback moment to head lower, right? Grab liquidity to head lower, then this wouldn't be the area where I want to double down at a weekly expected move on shorts at this point, right? I'm not trying to make $1 million, right? I'm not trying to make $1 million trying to take some crash trade and make a bunch of money. I'm trying to make consistent good decisions over time and create myself make myself into a good trader. And that's proven to be my story for a long time now. And I'm going to continue to make those type of decisions. And therefore, I'm not going to try to short something that has been dropping and dropping and dropping while it is forming divergence outside of a 68% zone, while it tags the weekly expected move. It's just something that I have to make sure I have in my head at all times. I understand that this is pointing in the downward direction at this moment. I understand it could become more complex throughout the rest of the week, but as of right now, we're paying attention. If this 2-hour does curl up, it is very likely that Meta is going to see the daily chart curl up, and we might start some kind of short squeeze. Microsoft, you notice that this could be a little bit more like the SPY, needing to potentially go make that divergence right away early on in the day. Now, Microsoft does have more downside. Microsoft is one of the stocks that's not outside of a monthly move, just so you are aware. But these things are very, very important because this could see more downside. And we're going to talk about Google in a second. And I'm going to show you what Google did. And I want you to think about Google after we talk about Microsoft here, because Microsoft could see a moment like Google where it gets that flush down moment to maybe go to a weekly or monthly expected move down in these areas. And then we see that thing curl up and create that divergence that's just really close to the center line. I would love to see it. This would be a great trade setup. Really, if you come to the live show tomorrow and you're pointing out one of these stocks, there's going to be potentially a trade setup on every single one of them. Now, if Microsoft is not going going to make that divergence. The 30-minute could just curl back up into positive territory right around that 5-day moving average. It's unfortunate we were able to lose it. Doesn't mean we can't still use this area as support to see a buyer step in and curl up into positive territory to potentially fill a gap. So if that 30 minutes able to curl up, we could see some positivity, and you're going to want to pay attention to that early on in the morning in case this becomes a little bit more complex. If you want to see what a 30-minute that gets more complex looks like, look at that thing, okay? This thing went down and down and down. It started to lose the weekly expected move, but it actually went to, I believe, the monthly expected move. If I'm incorrect, I'll fix that in the morning. But either way, we went to a key level, and we had a key level again right above us. And notice that we needed to get there to get people nice and probably bearish before we see the upside. We still could make reversal signals down here, so just be aware of that. But the main thing I wanted to talk about was the 2-hour chart and show that this was overall holding up a little bit better, and I would watch out for something like this to happen from Microsoft, so just be aware of that. But did we do anything bad? Did we violate this divergence point right here? That's the important thing. As we see the wick come in testing one of those moves, we want to make sure that this RSI is holding those divergences, and as of right now, it is holding that divergence point. We see by hovering our mouse here that this is higher than the previous point, and it's higher than the main point down in here, so that tells us that this has potential triple divergence outside of a monthly expected move, and weekly expected move is where that is being created, which tells us that Google, if this thing on the 2 hour is able to curl up, hey, that can see a nice positive move. I would be looking for resistance to potentially come in at 182.59 if we see some kind of squeeze in these areas. So the other thing is, just to note, the 2 hour is confirmed down right now. So if that never confirms back up, it is very likely that that is continuing to head to the downside. That is where I want to look for 153.87 for some kind of support. But if we did make that move, you would wipe out all of these divergences down here, and that would be a big problem for Google. We are aware how a crash can happen for these stocks and what they would do, but we're just not leaning towards that at this point. If we're wrong about that, we will be quick to trade like water, and we already should have our plan in place. If we're going to take a trade, hey, what's that saying? Plan the trade, then trade the plan. Looking at the VIX here, we see that the 30-minute divergence we were paying attention to ended up playing out. It was rather flat on the RSI, but it was there on the MACD, and we were paying attention to it seriously because this thing curls up 2 hour charts. What happened? It curled up a 2 hour chart. Now, we're going to go over to that 2 hour chart in a moment, but the 30-minute here is very important. Even if this wants to drift down for a little bit further, we could head all the way back down to 20 and see some kind of trap to the upside, see that divergence prove itself again, right? See a divergence really close to the center line, which would be very interesting with this positive move. So we will be watching the behavior from the SPY tomorrow. But if this 30-minute is able to curl back up, you notice that the 5 is right there. We could see some positivity from volatility, which means bad things for the SPY, at least maybe first off in the morning. First move doesn't have to be the right move, right, guys? Now, you'll notice that the 2 hour is negative. So we said before any of this stuff happened that when that 2 hour does cross up, it is very likely to be a lower high. So I'm looking for us to see this thing stop around that 24 level. That would be a nice place to get to, and then see that thing confirm down. We'll just watch out for any kind of divergences, any kind of signals that could go against our trade. And I will do that for you. If I see those things start to pop up, I will make sure to notify you in these videos or during the live show. Thank you so much for watching this video. I wanted to put up some lines on the screen just so you could see kind of the two scenarios that I'm more leaning towards, but I am open to the other scenarios as well because I like to trade like water and I like to react in real time, right? Reacting is what we overall like to do on this channel. We just talk about things into the future a little bit because that's proven to help us time and time again, and that is a very, very good thing. So something to be aware of here is volatility actually did call that gave you that 85% chance for a down day. It was very likely to see resistance at 570. It was very likely for us to test the 5-day, and we were aware of all those things, and now we're seeing it all happen. Now we have to see what happens with FOMC, and it is going to be a big day. So I'm looking forward to streaming with you guys all day long. Remember that the live show will start out on YouTube, then we will transition over to Rumble. And if you want to be a part of that, if you want to show up with us, come hang out with us all day long looking at stocks, join Rumble. The link is the first link down there in the description. I will put it in there for you. Thank you so much for watching these videos. I really do appreciate it. I love the fact that you guys are liking, subscribing. I think it's fantastic. The live shows have been just great, great, great. I cannot complain. I love this community a ton, and I just hope that we can continue to trade like water and make sure we're managing risk and also creating that plan for just in case something goes wrong, because tomorrow could see a little bump up in some volatility and we might get ripped around a little bit. Thank you guys. Hope you have a great night. Peace out.